What is going on, everybody? David Ramson-Wood with Mark Rossano. This week, how are you? Mark, how are you?
Going pretty well. How about yourself? Everything going well?
Everything is going great. Now, before we get into the meat of the show, there was a stat that came across about 2 weeks ago that said 78% of the people hospitalized and then hospitalizations leading to death were either obese or overweight. Now, for me personally, I took that as a challenge to get back on my fitness regimen. I know that you are a big workouter. Are you maintaining that? How's it been post-lockdown and in New York?
So we've been able to go to gyms for months now, so it's pretty good in terms of the setup that they have, and it's just a matter of people trying to maintain their own cleanliness, where you have to wipe everything down, you have to try to be respectful of others, which has been good. But I also have the luck of my father built a ambulatory surgery center, and there's a PT side attached to it. So I get to work out there after when they terminally clean it before I get in there, and then after I get in there, it's all terminally clean. So I get to cheat a little bit on that side.
Well, so to all the listeners, I'm challenging you to find your fitness goals as we come into spring. It's bikini season. I know I look really good in one. I hope you do as well. But that pivots us to the AstraZeneca vaccine conversation. It looks like in Europe they're not using it. There's been some challenges. Obviously, there's been some challenges with the other vaccines. And by challenges, I mean there's been some negative adverse events, which is funny because back when like one or two people died a day last March in the United States, it was like all over the news. You have 1,636 plus adverse events that have led to death post-vaccine, and there's no news anywhere. Give us a little vaccine update and your take on all of it, Mark.
So right now, the AstraZeneca side, the UK is saying that the issues that are being quoted, which are the blood clots, isn't statistically significant. But when you read a lot about the European side, they're saying that the type of blood clot being created is actually a fairly rare one, which makes it more statistically significant, which has caused that slowdown. Right now that the AstraZeneca is not available in the US, and it just puts us under quote unquote further review. But when you look at the rollout of the other three, so far it is going very well. We're coming to a point now where if you want it, you can essentially get it, with Ohio just expanding to 40 and over. But when you just look at what are the impacts, what are the issues, I know individuals who have had problems on the other side just because they've gotten really sick from it. Like both of my parents have received it. Both of them did not feel well, but again, it's just a matter of you now have a certain amount of safety, and I think that is really what is driven. Because when you look at the fear and the things that were said by the government, by the media, there has to be something to get that consumer behavior back to normal. And the answer is the vaccines. It's when people get that shot. And then once you get your second dosage, there's a 2-week grace period, and then you're considered fully vaccinated 2 weeks after your second dose. But when you look at the UK and Scottish data, they've essentially said first dose is good for 60% protection, so essentially a coin toss. But then by the time you get to that second one, even after you get that second one a day or two after, once it started to take hold, you're now 75%, and then you're at the full 95 to 96% by the time you get to that the end of that 14-day window.
So I'm still confused, and maybe it's too early to say. Before we pivot from the vaccine and talk about the reopening trade, we've certainly seen United Airlines surging, Carnival Cruise Line surging, some others. But are they saying that the vaccine is going to prevent the spread? Is it minimizing the illness? Where are we at in terms of what it's actually doing? Because we hear a lot of talk about vaccine passports. And so clearly that's something out there. And if President Biden is correct that by May 1st, every American can have it, I did a projection based on the percentage of adults that I think are going to take it. by June 12th, everyone who wants it is fully vaccinated with 2 shots or sooner. So where do you take what is the vaccine doing based on the data? And do you think a vaccine passport's even possible to implement?
So when you look at the vaccine itself, so if we take Israeli data, which has the most prolific, just given how small the country is, and it's a good sample size in terms of the movements, the initial view was that it just minimizes it for the individual. And it's not so much about the spread, but the impact to the person. And then even if you do get COVID, it'll just be a much milder version. You won't get as sick. You won't risk that trip to the hospital, to your point on earlier, comorbidities and other things that essentially made that problem much worse. But then when we look at the Israeli data, it is also doing a lot on the spread, where if the virus isn't taking hold to the level that it needs to in order for you to become contagious, it becomes a much better, it becomes not as easy for it to spread, even if you're in close quarters, even if you're in a poorly ventilated room, because as we've seen, it's ventilation and proximity that is really the problem, just given how long they can live in the air itself. So right now, the biggest focus has been it protects the person, but now we're getting more and more data where it's also minimizing your ability to spread the illness. Now, the biggest side is those comorbidities, because it's really, that has been where we've seen the biggest impact. So by giving that to those individuals who are most at risk, now we're looking at something that isn't all that as dangerous. When you're talking about an actual passport, that's really something that can be created at a very focused checkpoint. So could it be done at an airport? Sure, it could be done at an airport. But now that's just another piece that you have to remember to bring. You already have your license or your passport. You have your kids running around screaming while you're trying to maintain them. And let's be fair. If everybody's getting vaccinated, did you need a measles card? Did you need a polio? And given their different time frames and different people were moving about, but it starts to become a slipperier slope. And realistically, the airlines don't want it, because do you really want to make it where they get annoyed and feel as though that they're getting impacted again and their freedoms are getting challenged even further, which would say, look, I'm not doing that. I'm not going to wherever this is. I'll drive. I'll stay closer. So that's also something that the airlines don't want to have to deal with.
Yeah, I mean, it does. It certainly seems that again, it's non-statistical and it's hard to know, but it seems like, somewhere between 30 and 40% of adults probably don't take it. Now, maybe their views change because of a duration of time, but when you think about the lockdown and really what's happened in the last year, those are probably the 30 or 40% of people that have been traveling, and all of a sudden they aren't traveling. So it will be interesting, which brings us a little bit to the reopened trade. Mm-hmm. We saw over the weekend that over the 3-day period, we had as many travelers as were traveling at the same time last year. Now, obviously, we were about to go into lockdown. You follow the TSA numbers very closely. What do you make of the reopened trade, and where are we at relative to that? And add in stimulus and pent-up vacations, etc. What are you seeing?
So it's funny. I was actually just pulling that data, and I started talking about it on Twitter, because when you look at it, you have to start taking away 2020 now, because even though we didn't go into a full lockdown, there weren't too many. The restrictions weren't there. Consumer behavior was already shifting. So you already started to have that impact into the underlying data points. So when you look back to 2019 to try to clean up some of those data pieces, we always get an increase at this point in time. And the reason why we get that is we have winter break in February, and then we have spring break going into March, into April. So depending on where you are, that has always been a very big travel period. So we normally get those increases. So when you compare the increase in 2021 versus 2019, it's just moving in lockstep. We're not closing the gap against 2019. We're just seeing that normal increase in the same trajectory. Now, The hope is on the other side of this normal move, we'll continue to climb and close that gap. I just think that that is going to be a hard ask given where we sit in terms of joblessness, pressure on wages, and then just people maybe looking to pare back a little bit and making sure that we have that full vaccination. But we're getting much closer where more people feel better flying 2 to 5 months out versus 6 months out, 6 months plus out as previously. Then when you shift it to the driving data, it's something very similar. We always have an increase in March. It's spring, it's warmer, people feel better, they start going out a bit more, they start getting stuff for their gardens. You start to get that, and then you do have people driving for winter break and spring break. So we have that normal kind of pop on a seasonal level. The question is going to be, where do we go from here? My view is that so it's breaking mobility into two, the weekday and the weekend. So the weekend, we're already essentially back to normal. So on a weekend level, driving is either at or above the pre-COVID side. When I turn to weekday, we're still 30% off normal. And if you consider corporations still not opening up, people still opting for that flexible schedule, work from home combo, I just don't see weekday activity getting to the same level that it was previously. Now, do I think it stays at 30 to 40% below? No. I think we cap at about that 20%. So I'm assuming weekend we start to outpace by about 7%, but the weekday we hold down about 20% versus previous.
Interesting that you say that. My wife's company has just announced as of yesterday that everyone will be back in the office June 1st. I expect that we'll start seeing those announcements a lot more frequently because the data, and it seems to show that work from home productivity is probably 80%, but in terms of the culture and the onboarding and the sales cycle, I think all those things really suffer. So it'll be interesting to watch. Now let's pivot to commodities as part of the reopened trade. I want to talk to you about natural gas. We don't talk a lot about natural gas, but we've seen the super uber bull gas is $3 thesis give way to the gas really is not that exciting and it's back to sub 250. What do you make of natural gas, and what do you give responsibility to on this decline?
When you look at natural gas, you had a lot of the COT, or a lot of the market makers, a lot of the longer term holders were very active when you look at just what was happening in the curve itself. And you've gone to a net selling side when you're looking at who is long and who is short on the big market makers and some of the guys taking bigger positions. So that has put pressure on it. And the reason why it has continued, some of the data on storage has gotten a bit more bearish. There's going to be a bit more left in storage versus previous. The weather has gotten a bit warmer for March. We've lost a certain amount of heating degree days. And that is essentially kind of gone into some of the issues when you're looking at just natural gas in a bubble. But then when you span that out a bit and you look at the fact that WTI is currently at 64.37, that comes back to, okay, well, we see some more activity. What does that mean for associated gas? What does that mean for some of this additional supply as demand has started to not, it's been strong, don't get me wrong, but it's not as strong as would have hoped heading into the shoulder season, and that is kind of capping it. Now on the bullish side, which is why we still remain fairly positive over the longer term, LNG demand continues to move up. We continue to see the global consumption of natural gas moving in the right direction, which will be supportive of us able to export more natural gas in general in the form of LNG.
Now, oil, you talked about it down to, there was a lot of talk about WTI maybe hitting 70, the Uber bulls dancing on Twitter. We've seen a little bit of weakness. We're still north of 64, which is unbelievable to think of given where we were in November. But how are you feeling about oil? What are we seeing the response of producers, the frac spread, picking up rigs, cash flow, debt offerings, mergers? What's going on in the oil world right now?
So right now, when we shift over into Asia, we see a lot of weakness in Asian demand, and we've seen a lot of essentially this buildup in storage, and that's been concerning when you start looking at, okay, well, why am I talking about Asia when we're going to talk about frac spread counts? And it's when I look at U.S. exports. So U.S. exports have come under pressure, and they remain under pressure. You know, we had South Korea coming in by 6 million barrels for June. But you still have this gap as China goes into a pretty big turnaround season because they didn't do it in 2020, or they try to minimize as much downtime as possible. So you're going to get a big step up there. India is struggling under the additional lockdowns. So some states have seen an increase in COVID and they've started to lock back down. Again, not across India, just it's very state specific. But that has put a cap on diesel demand, gasoline demand. So we're starting to see that Asian softness that we've been talking about in the physical, which was very prominent in the physical market. Now, when we turn to Europe, you know, at the top of this, we talked about how AstraZeneca vaccine rollouts were slowing or stopping, depending on what state what country you're in. And but at the same time, we're having an increase in COVID cases. So we're talking more additional lockdowns. Gasoline storage is at all-time highs, seasonally adjusted all-time highs. You're starting to see some of the Rhine cargoes of ultra-low sulfur diesel coming to near all-time lows, which just means that you're starting to get some of this seizing up in Europe. So when you think about all of that coming back to the U.S. has been that bright spot. But now we have refiners starting to come back. We're pacing a huge amount of gasoline imports because the arbitrage opened wide open after the Texas freeze-off. But now we're on the other side of the Texas freeze-off. We have 182 frac spreads that are back active. But the problem is when you look at rig counts versus spread counts, we're still going to work through DUCs in the Eagle Ford and the Bakken. So we're going to have to start to see some of those rigs get active, because not only are we continuing to eat through the drilled but uncompleted inventory, we've been drilling through that or completing through that for the last year, where the Permian, the drawdown hasn't been as aggressive. And that's where we continue to see the lion's share of opportunity. But with the cap in exports, it's gonna put more into storage. So I think that we're gonna get a little bit of that pause. But at the same time, it's the seasonal, it's the shoulder season. Heating oil demand goes down. We start to see distillate demand going down, and it's not only just oil exports that will be under pressure. Brazil is facing more COVID cases and lockdowns, and Latin America in general seeing a slowdown on an economic and not just away from the COVID side. So U.S. exports of distillate, which normally go to Europe, is going to continue to be under pressure as they've been exporting distillates to us. Gasoline exports into Latin America will be slow as Europe is trying to send gasoline into wherever they can find it, which is going to take market share from us in Latin America. But at the same time, why would we export to Latin America when prices are so good in the U.S.? So you're going to see that kind of cap in, and I don't think people are appreciating the import-export side of how this is going to make our storage look over the next few weeks.
So do we hit 60 or do we hit 70 first?
So at this point, I think we hit 60. I think that right at this point, we're going to have, obviously, Powell's going to speak, and that's going to be interesting to say the least. But when I look at rates in general, I think rates are going to continue to go up, which is going to be supportive of the U.S. dollar. And you're seeing more pressure on some of the bullish narratives, which were Chinese buying in Asia, and then it was the U.S. in terms of some of these drawdowns. But then we had the big builds, and I think we're starting to see that normalize. And just between the stronger dollar, some of this kind of capping activity on the coast, I think we're going to see a bit of a pause and a move back to 60.
Well, we're coming up on the 1-year anniversary of the first lockdown in California. Challenging listeners that by 30 days, we're going to call this 30 days to flatten the belly. And I challenge each and every one of you to get on your exercise machine, lose some weight, get healthy, and be ready for bikini season. I am David Ramsden-Wood. I'm with Mark Rossano. Thank you for joining us, and we will see you next week. Bye for now.
Goodbye.